Buy the fucking dip. Buy the fucking dip. That's it. That's this video. Thank you, everybody. Take care. Thank you for coming. Goodbye. No, that's not the only video. That's not all. Okay, I'm going to be telling you guys exactly why I'm still remaining bullish on Ezilla. And if you've been following the things that I've been saying, you should be set up for success in ways that you cannot even imagine when it comes to Ezilla. So what am I talking about? Well, let's break it down and let's get chatting. All right, let's talk about what's going on with Ezilla. So first things first, listen. If price volatility is the reason why you bought a swing trade, to me, your brain is this big. Okay? If you're using chart patterns for your swing trades, I think you're dumb. I think you're dumb. I think you're dumb. Okay? That's it. Why? Because if you're swing trading, in a way, if you're swing trading just with the charts, you're not even understanding what a fucking chart is. A chart is a representation of buying and selling. Stocks go up because people press buy. Stocks go down because people press sell. Okay? Good. Now that we've established that. Oh, but Sam, the algos. Shut up. Okay? We don't control the algos. Do we control the algos? We don't control the algos. Good. So all we can care about is other traders' behavior. That's it. All right? That's the only thing that we can actually account for when it comes to our decision making. So, if you're looking at the chart, you're not paying attention to what the underlying indicator of what the chart does is, which is human psychology. So if you're someone who's just swing trading based off of chart patterns, you're a dumbass. Okay? Good. Because why? Because if you're planning on holding for an elongated period of times, what's going to happen is that the markets are going to play a major role. The broader markets are going to play a major role as to what those investors or traders that are looking to press buy or looking to press sell are going to do, right? The confidence that they're going to execute with, whether it's buying more shares or whether it's selling their shares. So again, if you're just strictly looking at charts, when it comes to stocks trading, when it comes to swing trading, you're a dumbass. Okay? That's it. You're welcome. Now, I'm not saying don't use charts. I'm not saying only... No. Use charts, but charts should only be a tool when it comes to your swing trading. So there's that. So I'm saying that to get to the fact that the price volatility when it comes to Ezilla has not merely affected my confidence in this stock's future. Not at all. Not one bit. Okay? Good. Now that we've established that, let's move on to why you need to be doing what I'm doing when it comes to Ezilla. So there are two ways of managing your risk. Okay? There are two ways of managing your risk. There is cutting losses or stop loss setting. Okay? And then there is position sizing. It's kind of like a scale, right? Think of it as a scale, right? Good. Now, this is what you need to understand, is that you can overcompensate with one for the other. So if you are someone who is using a lot of money, you can use a tight stop loss. But if you're someone who is using a small portion of your portfolio, you can trade freely as long as you've picked a good stock that will eventually recover and you have the funds to average down. If you're using a small enough lot size, the martingale strategy will work with a good stock. Now, this is the thing where the martingale strategy when it comes to stock market is actually different than when it comes to gambling. Why? How is it different, Sam? Because the odds of reversal or the odds of things turning out your way are not the same every single time. What do I mean by that? So look, let's say the stock is free falling, okay? It's free falling, it's getting destroyed, all right? Getting destroyed, absolutely crushed. You see it getting crushed, okay? Then I go ahead and I post this alert. I say, Ezilla, limit entry price. This is also what all the alerts look like in our community. Limit price, $3.50. Our exit price is 4.8. How many are you buying? Stop loss. What's your stop loss, Sam? None. I don't have a stop loss, and I will later be adding if it gets closer to 3 because it has good fundamentals. Share size. I'm buying 100 shares in a 10K account. Now, my account is way bigger than fucking 10K, but we use 10K as a benchmark for you guys to be able to make quick decisions. So let's say you have 50K in your account, you do times 5, you bought 500 shares. Let's say you have 1,000 shares in your account, you go ahead, or $100,000, you go ahead and you buy 1,000 shares, okay? What I'm trying to do here is I'm trying to show you guys how to balance this stop loss setting and this position sizing. Because let me explain something to you again, all right? We'll get back to the martingale strategy and how it's actually a lot more beneficial when it comes to trading to do so with good fundamental stocks rather than gambling, okay? Let's go back to the scale. So let's say that you usually trade with $10,000, okay, per trade. You trade with, let's lower the number. Let's say $2,000, okay? Let's say you usually use $2,000 per trade, all right? Now, with the $2,000 that you usually trade with, okay, you risk 10%. What is that? That's $200. Good job. Very good. All right, $200. Let's say you risk $200 usually to make $200. So you have a 1-to-1 risk to reward ratio. 1-to-1, he said 1-to-1 risk to reward ratio. You're a dummy. If you think that a 1-to-1 risk to reward ratio is bad, you're a dumbass. Okay? Why? Because going back to what I was saying, you can use more size. You can use less size. Like all these people that are only looking at risk to reward, risk to reward, risk to reward, they don't understand dynamic position sizing. What do you mean dynamic position sizing? Meaning that for a stock that has a 1-to-1 risk to reward ratio, I'm going to be using less money than a position that has a 1-to-3 risk to reward ratio. And here's the thing, actually the opposite of that. Why? Because the position that has a 1-to-3 risk to reward ratio, it's more likely than not that it's going to hit the stop loss than hit my price target. Why is that? Because I'm setting ambitious goals. And here's another thing as well. If you're setting your stop losses and if you're setting your take profits based off of what you want, and this is the big mistake that I see a lot of traders make, right? Is that they go ahead and, you know, I'm now opening a whole fucking different can of worms, right? There's a different mistake I see a lot of traders make is that they want that 1-to-3 risk to reward, right? They fucking want it so bad, right? They want to be that guy that has they've watched fucking Hamuzi's dumbass and a bunch of other dumbasses on YouTube talk about, oh, we got 1-to reward one. First of all, Hamuzi's a cool guy. I met him before. Very cool guy. He's also from Toronto. Shout out Hamuzi, but no disrespect to him. But a lot of different content creators, and he's actually one of the guys that I've seen use 1-to reward, risk to reward, and people are grilling him. You've seen a lot of these fake fucking influencers, okay, come out and say, oh, I'm using 1-to-6 risk to reward, only 1-to-10 risk to reward, only 1-to-50 risk to reward. Now your dumbass is looking at the chart. You've set your stop loss below the support level, okay? If support breaks, you're out, all right? But on the other hand, you know what you're doing? You're basing your take profit based off of multiples of the fucking stop loss. That's what a lot of you guys do. You base your either take profit based off of the stop loss, or you're basing your stop loss based off of your take profit. Just so you could say, oh, I have a 1-to-3 risk to reward. Trade with the chart, not with your heart. Trade with the chart, not with your heart. Set your exits below this resistance. Set your stop losses below the support. That's it. Doesn't matter if it's 1-to-6 risk to reward or it's 1-to-2 risk to reward. It doesn't matter. Trade with the chart, not with your heart. Trade with the chart, not with your heart. That's all I can say. Now, going back to the sizing model, okay? So, let's say that you usually trade with $2,000 and you risk $200, meaning that you have a 10% stop loss, okay? You trade with $2,000, 10% stop loss, $200. If things go south, you lose $200, correct? Correct. Very good. You're very smart. Now, listen. You can also go ahead and have a 20% stop loss and still risk $200. How? How can I have a 20% stop loss but still only risk $200? Wouldn't that be $400 of my $2,000? Here's the catch. Instead of using $2,000 as your position sizing, you can use $1,000 with now, instead of a 10% stop loss, a 20% stop loss. So look, so you were doing $2,000, okay, with a 10% stop loss. Now what you can do is you can go ahead and say, hey, instead of that, I'm still gonna risk the same 200 bucks, but instead I'm gonna use $1,000 with a 20% stop loss. That's how you manage position sizing and stop loss setting as your risk management. Too many of you guys are just so focused on stop loss setting that you're absolutely clocked out. All right, very good. You know, you guys don't really understand that. Going back to what I was saying, I just lost complete my train of thoughts, right? You guys don't understand that, hey, you can also manage your risk when it comes to position sizing. So what am I getting to? So why did I say stop loss none? I will be adding later closer to 3. Gets their good fundamentals. This means that I understand that, hey, eventually this shit's gonna curl back up and eventually it's gonna give us 4 to 5. It's gonna give us 4 to 5. Now, is the bottom gonna be 3? Is the bottom gonna be 250? Is the bottom gonna be 2? I'm not sure where the bottom is, so I'm not gonna set a stop loss. I'm not gonna say took a loss here, took a loss here, took a loss here, took a loss here. No. I'm managing my position sizing correctly. I'm buying 100 shares of a $3 stock in a 10K account. I'm spending 300 bucks in a $10,000 account. So I'm allocating only 3% of my portfolio. Now, that was our first entry, okay? Let's go to Top Trader Holdings. Go to Top Trader Holdings. Ezilla, okay? So we bought 50 shares at 3.09. No, we bought 100 shares at 3.5 first, okay? Then we bought 150 shares, or we bought 50 shares at 3.1. If we go over here, I updated these on like same day sometimes, same day basis, so they don't really like show good. But if we go to swing alerts, Ethz. So as you can see today, we bought the dip at 2.5. Where is it? Where is it? If I can find this Ezilla alert. Okay, I can't find it. But we also bought, so look. So we started our position with 100 shares at 3.5. So 3.5%. Then I bought 50 more shares at $3. Okay? What is this? This is like 1.5%. So 5% here. Okay? Then I went ahead and I bought today 150 shares. And if you look at my original message, if you look at the original message that I posted over here, I said 100 shares in a 10K account for now. I'm saving room for a potential dip lower. I want a total of 300 shares after everything. It's sitting at 250. It's sitting at 250. Where is it? Ezilla. It's sitting at 250. Okay? I have 300 shares with a cost basis of $3. I'm fine. I'm fine. You don't think the stock's gonna get above $3 ever again? You really don't think the stock's... So instead of going ahead and saying, okay, I want to own 300 Etzillas. Let me go and buy it all at 350. No, you know what I did? This is a lot of y'all, okay? This is how y'all act. Okay? He said it's a good buy at 350. Who cares that he said 100 shares? Who cares in his video he said save some money so it can come down? No, I'm gonna wait. I'm not gonna wait. I'm gonna buy it all. He said I'm gonna buy it all. Listen to the shit I say. If you listen to the things I say, you will get the same results as me. But if you half-ass my instructions, you're gonna get half-ass results. And you know what half-ass results equates to in trading? You lost money. This is a game of perfection. This is a game of doing everything exact the same in order to get the same results. Why do you think my alerts are so in depth. Go look at your favorite Discord mentor. Go look. I'll tell you how they send a fucking alert, okay? And I know because I hired these fucking people from different Discords. When they come to our Discord, they don't want to do this. You know why they don't want to do this shit? Because they have no accountability. The dude says this. The dude says, I'm buying from the $1 range to the 150 range. And then I'm selling from the 150 range to the $2 range. Dog, what the fuck? What are you talking? Like, that you just gave me two 50% ranges to buy in and to sell in. That's how they move. They say buy and then buy. That's how these guys work. So again, Ezilla is far from over. Right now, we have a big portion of our, not a big portion, we have this fucking nothing really, right? We have about 10% of our portfolio, 9% of our portfolio allocated to Ezilla at the $3 price target. I'm willing to have 15% of my portfolio allocated to this stock. I'm willing to do it because I believe that this is going to be at the $4 to $5 range sooner than later. Now, we have some big ass positions as well, right? But I have a lot more conviction in those companies, like PLTU. You know, PLTU, 50 times 7, like we have 35% of our portfolio at $72 a share. PLTU. Now, I'm probably going to close some sooner than later, right, in the upcoming weeks. But you see, I have 36% allocated in the stock. Again, this is as if the account has only, this is as if the account has $10,000 in it. So you can look at these numbers. I mean, you know, it's funny, okay? It's funny to me. It's one of those things that, you know, people watch these videos and they think that if I say, oh, buy, it just means, okay, go all in, go all in, go all in. And that's because you guys are not used to strategically entering a position. You're used to just buy and either it goes up or you lose money. So this shit will be making many features in the videos from here on out. Okay? Just so you know. Okay? That was good. I like that. I got that from Disneyland. That shit was fun. Okay? Anyways. Thank you. Thank you. Thank you. Thank you. I hope you learned a thing or two from today's video. Alright? And subscribe. Listen, subscribe. Alright? I'm not your typical fucking YouTuber who comes here and goes, hey, how are you guys? Today we'll be discussing... No. Straight from the heart. Straight from the heart to you guys. Alright? Now, listen. If you're tired of losing, if you're tired of getting your ass whooped, and you want to come trade alongside me every single day, okay? Get access to my day trade alerts, my swing alerts, my option alerts, you name it, we got alerts. Check out the Discord, okay? Check out the Discord. This is literally PLTU we bought the other day, right? Check out the Discord. The Discord right now, we added our we extended our sale which we had ongoing for Labor Day. So right now, the next 10 members that join, they still get access to it for a 50% discount. And one more thing as well. One more thing. Our Discord is different. Why is our Discord different? You're skeptical, you should be skeptical, okay? Always be skeptical. When anyone that tries to pitch you anything, okay, in today's day and society, you should be skeptical. A, B, okay? Our Discord comes with a 2 weeks free trial and a 30 days money back guarantee. Previously, guys, we used to do a 7-day free trial. Now we're doing a 2 weeks free trial. The Discord will come with access to my day trade alerts, swing alerts, option alerts, and also 5 other mentors alongside myself with over 10 years of experience and 5 years of consistent profitability. I have audited their portfolios. I've gone through their portfolios. I've seen, okay, this person's actually been profitable for the last 5 years. I trust you. Okay? So this is not like stock Twitch or like Reddit or like fucking Yahoo Finance where everyone's just talking over each other. You don't know who's who. You don't know whose advice to follow. No. We have everything systemized. Okay? Now, since thank you for all work. Previously we did a 7-day free trial. Now we do a now we do a 2 weeks free trial. We've been kicking ass. We've been killing it. Before joining Top Share Money, I'll be next. What are we going with? Bang. We've been going off, guys. We've been absolutely going off. Okay, literally today. Thank you, Master Sean. Options. We made a killing on some options. Joel. Another good day today. 3 out of 3. Bang. Just try it out. Try it out, see if you make money. If you make money, come back for more. If you don't, good to end the month. Learn the importance of risk management. Took out 6K, by the way. Sounds helped me surpass my job. Is what we do, man. Is what we do. Today's the first day trading with you on the small account. I left losing on my own. I'm up 13% today. Thank you. 2 weeks free trial, 30 days, money back guarantee. Josh, finally have a good week. We've been crushing it. We've been crushing it. Read some of these. You know, I could read these for hours, man. I could. Joining this account has been life changing. 16,000 in the last month. Go on the website, see if you can afford it. If you can't afford it, leave. If you can't afford a free trial, you need to reconsider your existence on this planet. But I understand that some people are, you know, again, they just can't even afford a free trial. So give it a shot. 2 weeks free trial, 30 days money back guarantee. To me, I think it's easily the best decision you'll ever make when it comes to your trading. But, you know, if it's not, 2 weeks free, 30 days money back guarantee. And our guarantee is no reasons required. You can cancel for any time. You receive a full refund. Anyways, I appreciate you guys. Thank you for watching. Have a listen trading. Your boy Sam from Top Academy.